Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FXPesa. So today we'll be taking a keen interest in what's currently happening in the markets, with a key focus on the earnings reports that are coming up later in the day. We'll be watching closely the earnings from Amazon as well as Apple. After we saw several other magnificent seven companies doing really well, especially with a focus on Meta and Tesla. So also Google performed well. So now we get two more. So hopefully this will be a key driver in the market. So also in the afternoon, we're expecting the US core PCE price index, which is the Fed's favorite measure of inflation. We'll be trying to understand that and how it may impact the markets. So as usual, I would like to begin with a disclaimer that this session is not investment advice. It is not a recommendation to trade, so you should always do your own due diligence and practice proper risk management. So let's get things started. And of course, once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So at the same time, if you have any questions relating to the presentation, feel free to type them in, and I'll be responding as we continue the session. So without wasting time, let's jump straight into the economic calendar and try to understand what's moving the markets today. So early this morning, we had a major announcement, and this is from the Bank of Japan, where the Bank of Japan made a decision on interest rates to maintain interest rates at or around 0.25%. And in this case, it came in as expected. So the previous rate was 0.25. We expected the same and still got the same. So nothing much from that, but looking at the monetary policy statement and the press conference, there was a promise by the Bank of Japan Governor Kazuo Ueda that if projections go as expected, then there is a strong likelihood that the Bank of Japan may consider further rate hikes. And as a result of that, we saw the Japanese yen pairs strengthening. So if you look at your charts and try to observe the performance of the Japanese yen this morning, then you'll notice the strong performance so far. So also early in the morning, we had manufacturing and non-manufacturing PMI from China, where we had improvements in both. So for manufacturing, we had 50.1. Remember, 50.0 is the midpoint between contraction and expansion. So we have seen China basically shifting from 49.8 previously to 50.1, indicating strong growth. And of course, for the services sector, from 50.0 up to 50.2, showing promise of recovery in the Chinese economy. So retail sales from Australia showed a 0.1% increase, which was way worse than the previous reading of 0.7 and worse than the projected 0.3% increase. So building approvals on the upside, 4.4% compared to the previous reading of a drop of 3.9% and the expectation of 2.2%. So going forward for the rest of the day, the main focus will be on the afternoon. At 1 p.m., we'll be getting the core CPI flash estimate for the Eurozone, where inflation is expected to have dropped to 2.6% year over year, compared to the previous month's reading of 2.7%. So if we get any surprises in European inflation, we could be seeing some volatility in euro pairs. So later on, we'll be getting GDP data from Canada, where we're expecting that in the last 1 month, there was 0.0% increase. And of course, the previous reading was an increase of 0.2%. So we'll be looking to see whether we get some form of surprise from Canadian GDP. Of course, a stronger than expected GDP is expected to be positive for the Canadian dollar, whereas a weaker than expected GDP is expected to be negative for the Canadian dollar. So also, the main event of the day will be the core PCE price index, or personal consumption expenditures price index, which is a measure of the level of inflation in the US economy. It's measured month over month, as well as year over year. So month over month, we're expecting a 0.3% increase in the previous month, which would be higher than the previous reading of 0.1% increase. So the main reason that we'll be focusing on this one is basically because the Federal Reserve uses the core PCE price index as its favorite gauge of inflation. So if we happen to see any surprises, it could cause some much bigger volatility in the market. So remember, the US has been on the course or on the verge of basically winning against inflation. So if we happen to see a big surprise, then that could lead to much more volatility in US dollar pairs. So I'll be jumping straight to the calendar just to give you the highlight for the year-over-year numbers. So I'm looking at the core PCE price index year-over-year. So this is what we have had over the past couple of months. So dropping from 3.657 all the way down to a bottom of 2.63 before we started to see an increase to 2.649, and in the previous reading 2.678. So in this case, we will be expecting a further increase. So from the calendar here, sorry for that. So right from the calendar here, I'm looking at core PCE price index. So as for the previous reading, it was 2.7%. And this time we're expecting a 2.6% number. So if inflation continues dropping towards the Fed's target of 2.0%, then that means that the Fed is achieving its targets. And given what we saw with the ADP non-farm payrolls, which was a big uptick, then we should be expecting the dollar to strengthen as the Fed could go easy on the rate cuts. So that will be the key highlight of the week and key highlight of the day. Then after that, also at the same time, we will be getting the employment cost index, as well as the weekly unemployment claims, which are expected to have slightly increased from 227K to 229K. So besides that, we have other key events coming up for the day. So one of them is the Amazon earnings, Q3 earnings. So will Amazon rise to record highs or repeat its Q2 horror show? So the earnings season for Magnificent Seven stocks is looking strong. It began on a stellar note with Tesla, whose CEO Elon Musk upbeat commentary on the company's outlook helped the stock record its best day in over a decade. So Alphabet, which is the mother company to Google, is also trading sharply higher ahead of the bell today after the company reported an impressive set of numbers for Q3. Tomorrow, this article was written yesterday, so tomorrow is today. So we have Q3 reports lined up for Amazon as well as Apple. The mega cap tech giants are stepping into the confessional at a time when the NASDAQ composite has hit record highs, breaching its July peak. Amazon, conversely, hasn't been able to break above its July highs, and the company's Q2 earnings, where it not only missed top-line estimates, but also guided below Wall Street forecasts, didn't help matters. Can the company set the narrative back on course with its Q3 earnings and rise to record highs, or will it be another horror show like Q2? We will discuss this in the article beginning with Amazon's Q3 earnings preview. Of course, we'll be skimming through this, and if you need a link to the article, I can add this to the comment section so that you can read it in your own time. So I'm just posting it in the comments section as we speak. So good morning, Robert Cavale, David, Jacqueline, or Sports TV, Lloyd, OG. Thank you for joining. Joseph Gisharu, Yusufu, Tiger. I can see Victor in the house. Dennis, Mwangi, Wangari, Patrick, Jason, and Maureen. Thank you all for joining. So make sure to like and subscribe to the channel. And if you're watching this on X, remember to share the live. So besides the big tech earnings, there are other things happening in the markets. So one, Meta's that quarter profit surges 35%, reflecting strong ad revenue and its AI push. So this was a big performance from Facebook, now called Meta. So Meta Platforms Incorporated posted stronger than expected that quarter results on Wednesday, fueled by its advertising revenue growth and its push to incorporate artificial intelligence. But the Instagram and Facebook parent company warned that it expects a significant acceleration in infrastructure spending next year as it continues to pour money into developing AI. Nearly all of Meta's revenue comes from advertising on its platforms, so a slight shortfall in user numbers also put a dent in an otherwise strong quarter. Meta said its family daily active people, that is the number of users who signed into at least one of its apps, that is Facebook, Messenger, Instagram, WhatsApp, and Threads in a day, was 3.29 billion on average for September. Analysts had expected 3.31, so there was a slight miss. So the miss in its user metric, daily active people, is concerning, as Meta will need to squeeze more revenue out of its existing users as growth slows, said e-marketer analyst Jasmine Enberg. She added, though, that the company is in a good position to do so, as its AI-powered tools are boosting engagement by helping show users more of what they like and making its ads, particularly on Reels, more effective. So the 3 months ended September 30, the Menlo Park, California-based company earned $15.69 billion or $6.3 per share, up 35% from $11.58 billion or the same year last year. So you can see the revenue, the earnings per share growth is quite staggering, from 4.39 in the same quarter last year to $6.03 per share. So revenue rose 19% from 40.59 billion, from 34.15 billion to 40.59 billion. So we should be expecting to see more activity on the Meta stock later today. So also, yesterday was a big day in the UK. This is the official day when they were reading the budget, and there was quite a number of new announcements. So on one side, there is taxes increased. So a couple of taxes were revised to the upside. So spending was also increased. So the government will be expected to spend a bit more on the next financial year. And borrowing also went higher as the new Labour government seeks to rebuild the UK. So British Treasury Chief Rachel Reeves raised taxes Wednesday by around £40 billion, or basically $52 billion, to plug a hole she claims to have identified in the public finances and fund the UK's cash-starved public services in a beefy budget that could set the political tone for years to come. So in the Labour Party's first budget since regaining power after 14 years in July, Reeves also changed the UK's debt rules, a move that will allow the government to borrow more, as she explained, invest, but which opposition figures described as fiddling of the books. Her biggest cash commitment was an additional £25 billion for the cherished National Health Service, which has seen waiting lists rise to record levels in the wake of the coronavirus pandemic. The choices are made today, and I quote, are the right choices for our country, Reeves at the end of a statement that lasted almost 80 minutes. To restore stability to our public finances, to protect working people, to fix the NHS, and to rebuild Britain. So more on this later. So I'll also be sharing this so that if you'd like to dive deeper into it, then you will be able to go through it on your own time and see the major highlights from the UK budget. So good morning, Chris. Good morning, Gerard Kimani and Leonard Oriroy. So as usual, and I like to emphasize this, if you're watching this from YouTube, like and subscribe. If you're watching this from X, I really appreciate if you'd like and retweet the live session so we can get more traders getting to benefit from this session. So among other highlights in the markets is one, Supermicro Computers shares plunged 33% after server makers accounting firm quits. So basically their auditor quit or basically refused to audit the firm, and that caused widespread panic in the market, leading to the shares dropping by 33% yesterday. So this was a big surprise in the market. So shares of Supermicro Computer plunged 33% on Wednesday after the server maker disclosed that Ernst & Young had resigned as its public accounting firm. According to a regulatory filing by Supermicro, EY resigned while conducting an audit for the tech company's most recent fiscal year. The accounting firm communicated concerns in July over issues like transparency and internal control related to financial reporting. Wednesday's filing notes, later prompting Supermicro's board to enlist a review. Additional information received during this review then led EY to raise questions about whether Supermicro demonstrates a commitment to integrity and ethical values, the company added, as well as transparency and oversight independent of the CEO and other management. So quite a developing story. So we might see some more activity on Supermicro as the market opens later this afternoon. So trying to see if there's any other highlights. Of course, I mentioned about Japan maintaining rates at 0.25%. So that's just about it. So also other key highlights in the market: China manufacturing expands for first time in 6 months. So we already saw this. German retail sales unexpectedly rise in September. European markets set for lower open. Saudi Arabia economy recovers in Q3, basically growing by 2.8%. Bank of Japan holds rates amid political uncertainty, and Brent extends gains on US crude drawdown. Of course, Australia retail sales growth below consensus. So that being the major highlight of the day, I believe it's now time that we shift and move to do some technical analysis to try and understand where the markets might be headed next. So good morning, Nonizo Jack. Thank you for joining. So let's get into some technical analysis, understand where the markets might be headed as we approach the end of today's presentation. So from what we have seen happening with the dollar index, which has been pretty strong for the last 4 weeks, there's reason to believe that now we might be experiencing some form of pullback following the set of data that we have received this week. So far, I would say that the dollar index is trading in a range. If we map this area here, we can say that for the last 7 days, the dollar index has been moving sideways, and this has been the overall movement. So 3 times retesting the upper side and 2 times retesting the lower side, with an upper trajectory of 104.434 and a bottom of 103.770. But now we are seeing the potential for the dollar index breaking towards the lower side, indicating some form of weakness coming in as we approach the US election date, which is the 5th of November, and the Federal Reserve interest rate decision day, which will be on the 7th of November, 2 days after the final election date. So clearly, for today, it seems like hour over hour, we have been seeing the dollar index just weakening, and this is giving some breathing room to other major pairs. So one, we have the EURUSD making a bounce and eventually breaking above the previous resistance. Then today, after a slight pullback, it seems like the market is headed even higher. So we could be seeing the EURUSD going for 1.08712 after the slight pullback that we saw here. So we don't have much of an activity on EURUSD, but on other pairs, we have quite some volatility, especially if you consider yesterday during the budget trading, there was a big drop in pound USD, which was followed by a very strong rally, a rejection of higher prices, and then a pullback all the way down, showing increased volatility for the pound USD pair. And then today, in the Tokyo session, you can see the pound USD has rebounded strongly, erasing earlier losses, and we could be seeing an extension of this. Clearly, you can see that there's a pattern that is developing here, where the market is consistently finding resistance, and now having bounced from the lower trend line here, we could be seeing an extension of this rally moving to around 1.30350. So as for pound yen, notice how we had this rising wedge formation here, and then the market broke out, retested, and continued moving higher. But then after the decision by the Bank of Japan to hold rates steady at 0.25% and promising to potentially hike rates again, we have seen the Japanese yen strengthening. So if I was to claim this chart and then we remove everything, then you can easily visualize the way the market has broken the lower trend line. So in this case, notice this. So market breaks towards the lower side. After the break, it pulls back and then shows continuation. So in this case, showing a clean book pattern and perhaps the favorite for the day. So if you're looking for a favorite chart to be looking for opportunities, this might be it for going for short selling positions in pound yen as well as USDJPY. So for USDJPY, it's the same story. Can remove everything here just to clean the chart. Then we go through the lower trend line here, how the market has been moving. So that was the basis of the support. So a breakout, retest, and continuation. So we still have more room for downside. So the market hasn't hit a particular support area yet. So we could be seeing an extension of this bearish momentum to 151.552. So the Nikkei 225 index was on a very strong bullish momentum after opening with a big dive downwards and then recovering for the week and rallying all the way up. We didn't quite get to the target we had identified here. So we got really close, but the market didn't touch the target. So after that, there was a reversal. And of course, after today's announcement, we can see the big sell-off playing out. And now there's key levels to observe around this area here. 38,247 yen per share of the Nikkei 225 index. So there's still some more room for downside for at least small intraday trade. For gold, we saw the market forming this particular flag here. Eventually, there was high volatility, and then the market broke towards the upper side, formed a triple top. Notice the high that we had, this point here, and then in the afternoon, and then today in the morning, indicating a rejection of higher prices, and now we are seeing gold moving further back downwards. So clearly, we could be seeing gold retesting this area here, which is already happening. And if we happen to see a break, potentially, there is some key levels to observe. One is yesterday's low, and the other key level is right here, which was acting as resistance. So potentially, if we have a break here, then a drop to 27.71 might play out. And if it moves beyond that, then we could be seeing 27.57 as the next target. So Brent Oil, clearly, this is a chart I had labeled earlier in the day, with the open price in the new year being around here, the highest price in the year, the lowest price, and the price today. So the highest price of the year was around, sorry, I have to use the daily. So from the daily time frame, this was the opening of the year, around $78. We got to a high of $91 and then a low of 68. The current price level is around 71, which is very close to the low of the year. So at the beginning of the week, we had a big sell-off in Brent oil prices. And then from there, we have seen Brent oil attempting to make a recovery. So this was the big sell-off at the beginning of the week after there was relief, considering that Israel did not strike Iran's oil infrastructure. So after that, notice how the market continued pushing lower. Then on Tuesday, some further movement downwards before making some recovery yesterday. So notice this area here was acting as the resistance on Monday after the big sell-off. So the market retested here yesterday, and today after getting to this area, you can see sellers coming in, indicating that there's more pressure to move to the downside. And of course, the next key level target is all the way down to the lows that we saw on Monday afternoon. So clearly, very nice and simple move all the way down to around 70.924 for Brent oil traders. So the NASDAQ 100 index had a big sell-off yesterday. Of course, you know about the SMC and what happened to them and how the stock dropped by 33%. So even today, you can see the continuation of the same bearish momentum going towards the target we had identified yesterday, around 20,117. So there's still more room for downside momentum, but there's no telling what happens once the price gets to this area. So for the Dow, we mentioned about this range and the market getting right back into the range. So there was a strong bounce. The market played around here for a while, but now it's right back and going back for the target at 41,871, a support level. So for the Russell 2000, in this case, it refused to drop as we had projected. And now is the time that it's finally forming the bearish momentum. Of course, we should be expecting to see some further downside after forming this, I would call it an inverted flag kind of formation. The market was following this path after making a big movement downwards. And now seeing this breakout playing out, there is a good chance we could be seeing some further downside momentum all the way down to the base of the pattern. So potentially extending the bearish momentum to 2200 price level. So SP500 is already getting to target. So a little bit too late to be looking for a short selling position. So perhaps it's more meaningful to be observing the price action around this area to see if there will be buyers coming in at this level and the market bounces, or whether the market breaches the level and continues moving downwards. So for now, the S&P 500 is a wait and see kind of scenario. For Bitcoin, after the strong rally that we saw here, so notice on the daily time frame, we had highlighted here that the market had broken out. Of course, we expect a straight forward move towards the previous high. So we already got there, even though not the exact price action level. So the highest that we saw was $73,618 per Bitcoin. But then since we got there, notice how the price has been struggling to move forward. So in this case, if you observe the price action around the current level, then the overall conclusion is that this market is basically consolidating. So we don't have much happening around here. So clearly, it's more of a market that is not making much of a movement. So consolidations are good. They form the basis of another price action movement. So perhaps it's more meaningful to wait for the potential breakout in either direction with more bias towards the upside, which is the overall trend direction. So as for the dollar trading against the Swiss franc, clearly now we have a break and a retest. So we had a break early in the morning, market moved back up and then further downwards, indicating that now there's a potential that the market extends the bearish momentum. So the base of the pattern is around this area here. So of course, when the market breaks out, the potential is that, sorry for that, the potential is that this market accelerates the bearish momentum to 0.86315. So as for New Zealand USD, there's literally a market struggling to form newer lows. So having formed a higher high yesterday, notice that the high yesterday was higher than the one that we saw on Tuesday. So now it forms the basis of a potential reversal. And now that we are seeing the dollar index being pretty weak, then there's a good chance that the market could be going to retest yesterday's high. So a potential move to yesterday's high might be playing out, and this is on the basis of a much weaker dollar for the rest of the day. But of course, there's news coming up at 3:30 p.m., so which might eventually change everything. So take everything with a grain of salt. So of course, we have USDCAD here, clearly struggling to continue with the bullish momentum. And with today's weak dollar, it seems likely that we are struggling to break the target. The target was here, which was a previous high, 1.39458. So notice how yesterday the market got really close, but did not quite break that level. So in this case, we could be seeing some profit taking for the people who enjoyed the strong bullish momentum throughout the month of October for USDCAD traders. So clearly yesterday, the daily candlestick showed some rejection of higher prices. So now we could be seeing a second candlestick moving downwards. So be on the lookout for a potential reversal in USDCAD currency pair. So that's it for the day. Of course, we have silver. I almost missed this one. So for silver, we had analyzed and saw that the market broke out, retested, and was expected to rally all the way up. So didn't get quite to our target, but a reasonable move from this played out to 34.538. So since then, we have had a pullback. So we go to the previous bottom, and now it seems like the market is extending the bearish momentum. Of course, the base of this pattern was here. So potentially, now we are looking at the market basically pushing further downwards to $33.077 per ounce. So that's it for the day. I'll be checking on the comment section to see if there's any questions, respond to the questions before we end the session. So as always, remember we have a new episode of the Bullish Banter podcast. So I'll be sharing this. So on this particular episode, we had a special guest with us. If you know our special guest, then congrats to you. But if you haven't watched the episode, it goes really deep into the US stock market, the bond market, the US election, and what to expect, especially in this week as we approach the US elections. So make sure to check out the episode. You can share some feedback. If you really like the episode, if you have any questions, then we'll be responding to that from the comment section. So a good question from a person using Hotspot CV handle. So is it logical to expect gold to make a sustained retracement, bearing in mind that DXY seems ready to reverse? So what we have been seeing for the better part of the year is broken correlations. So just because the dollar is strong doesn't mean that gold is going down, and just because the dollar is weak doesn't mean that gold is going up or down. So that correlation has been long broken for some good time, for that some better part of the year. So what we have been experiencing is gold basically trending on its own territory, and the dollar also trending on its own territory. So today, if they have been positively correlated, then it's more likely that if the DXY is weakening, then we could also be seeing gold weakening as investors perhaps pull off their bets as they prepare for the outcome of the US elections. So how will the election affect the US pairs? This is a good question. We recently had a discussion about the same with FX Pesa on a live session. So I'll be trying to show you this. Just give me a second. So yeah. So I would like to refer you to this. Just go to the FX Pesa Twitter handle. The handle is FXPesa_official. And then check the pinned tweet, Trading Insights for the 2024 US presidential election. So these are Twitter space that we did for 1 hour 45 minutes, basically discussing what we expect for the US presidential election and how this impacts the markets. So hopefully this will answer your question and give you deeper insights rather than getting a 20-second response. So how impactful will PCE readings be? If strong, can we expect USD to be strong for the remainder of the trading day? Yes, absolutely. PCE is a big determiner of market direction for the day. So if you happen to see a strong PCE, meaning that inflation is likely increasing, then in that case, the Fed might hold off with the rate cuts, and as a result, we could be seeing a very strong dollar index as well as a very strong dollar against other pairs. So in that case, it's more likely to determine the direction of the markets. So a good question from Felix Ojoang. Morning, Rufus. Is there a reason for today's bullish jump by the yen basket? And is there a possibility of continuation? Sorry for that. So I already discussed this at the beginning of the session, that the Bank of Japan chose to maintain rates at 0.25% this morning. And then during the press conference, the Bank of Japan Governor Kazuo Ueda basically said that if fundamentals of the Japanese economy continue as they expect, then in the near future, they are looking to continue hiking interest rates. So that promise of hiking interest rates led to the strengthening of the Japanese yen. So that's the basis for the strengthening of the yen pairs. So of course, we should be expecting them to continue strengthening, especially if we see a weaker currency in the afternoon, then you can find a good pairing. So also another question, is BRICS push for a new reserve currency going to have a positive or negative effect on yen and DXY? Well, so far, there's no very strong promise of a currency that the BRICS have already adopted or are planning to adopt. But one thing is true, and what we know is that the BRICS countries, Brazil, Russia, India, China, South Africa, Iran, Ethiopia, all these countries have been ramping up their gold purchases. So the biggest take we can call from this is that their demand for gold is driving the gold prices higher. So the angle I would take on this one is gold prices continuing to move higher instead of looking at the impact on DXY as well as impact on the Japanese yen. So thank you for the fun comment. So thank you very much, everyone, and I hope to see you guys on the next session. If there are any listeners from Tanzania, you should know that we will be meeting on the launch event that is happening on 2nd. So prepare for a good session, and we'll come equipped with some good information about trading markets, especially in this period when the US is going through the presidential election. So thank you very much, guys. Thank you for your time, and I hope to see you on the next one.